Aloha, this is Joshua Hayes with the BigWaveTrading.com report for October 2nd, 2008. Just like I told you that we probably weren't done with the selling, it became apparent today that we weren't, as the S&P 500 fell 4% today on volume heavier than the day before. Once again, I want to remind you, this is only slightly above average volume, so I don't expect this to be a bottom more so than it is the midway course, probably through a correction. But volume picked up today on the 4% decline on the S&P 500, and it also picked up on the NASDAQ today as it actually broke its 1983 lows and hit 1976. Volume was above average again, showing that the few funds that decided to participate in Wall Street came out selling after a weak bounce that came on lower and lower volume. The failed rollovers should continue to confirm what I have said about this market, in that you do not buy stocks when this price is below the 50-day moving average, the white line, which is below the 200-day moving average, the purple line. Until you have a situation like the dollar, which, as you can see, in August got back above both lines, and then in September the white line took out the purple line, and then the white line acted as perfect support. Now look at our U.S. dollar. It's now up to 80 based on its index from a low in March, or in April, whatever, I can't even remember when it was, of around 70. So it's nice to see that this index has come off 12% off the lows. It looks good, it looks solid, and the United States dollar is strong despite everything that's going on. So I guess that is good. We could have hyperinflation, I guess, or we could have hyperdeflation, I guess, and we don't really have either one right now, so that's good. But looking at the NASDAQ 100, volume picked up on the selling today also, confirming that I don't see a bottom, and as much as I see this just being par for the course for a little while. Like I say, if you take the 1929 to 1932 Dow chart and if you put it over the NASDAQ chart, you'll see how eerily similar these two charts are with the way that they run up and then respond and then react and then break down again. But the bottom line is that stocks are still not to be bought here at all. The volatility index did jump a little bit today at 45. Small caps fell 5%, which should show you exactly how bad it is, because that 340 level is much lower than the 351 it had at the lows of just 2 days ago, or 3 days, whatever, 3-4 days ago after the crash. But today's 5% loss is definitely very, very ugly for this index, including the Russell 2000, which suffered extreme selling today too, to show you that the last bastions of hope are nowhere to hide your money, as weeklies can show clearly that they are rolling over, and they are rolling over on, you can't see the volume on these, but at least on the NASDAQ and things like that, you can see the heavy, heavy distribution day on the volume. So there still is nothing to do. I still can't say short stocks when stocks are down this far, and to say go long stocks when the indexes are in such a downtrend would be highway robbery and criminal, would be Kramer-like, and that's not like me. The good news is the VIX is up around 45. We're getting closer to the 50 level. That's very pessimistic. The good news is the United States dollar is very strong amongst the middle of this. The bad news is that there's still a long way to go, and I don't have too many charts out there that look good at all. I mean, this is about my best one out there, and as you can see, it's losing its max green bop as it drops each and every day as it goes along. So things don't look too good out there, and I don't think they're going to look too much better anytime soon. But in due time, it will look better. I mean, we got to remember the top. I mean, we're already, this is October now, so we're about 10, 11 months in from the top that we had last year on October 31st. So things aren't great, but things aren't horrible either. So at the same time, I wouldn't go out and panic sell, unless you're holding something like pot and moss, which I've been short, in which, as we can see today, congratulations for everybody that took these shorts. We're finally getting paid for our discipline. And Apple is proving to everybody that the 100 mark probably is not going to hold. Like I said, I see Apple going to at least 20. So I think that should help some people and where I see. And no, I did not say I was just going short Apple or Research Emotion. I've been short these two for quite a while, just like Pod and Moss. I can see Research Emotion easily hitting the teens. So that's just a look at where things can go. Pot can hit the 30s. Moss can hit the teens. Moss can hit the $3 area. In fact, I mean, we just have to be honest here. But if anything, we should be more on. I would say closer to a bottom than a top. I would like to think. I don't know. There's about my top here, and we're now 30%, of course, off the highs. Let me go to a daily. Back to October. There's the highs. So we are 30% off since the highs in October. So if you're doing better than down 30% from October 31st to now, you're beating the market. And I guess even if you are down 20%, that's pretty bad, but it's better than being down 50, 60, 70% like I'm sure some people are. Really, there's not much else to do. We just have to sit tight and wait. When the charts show up, I'm not going to miss them. I'm still watching out for them, and I'll let subscribers know. If you're not a subscriber, too bad. This is Joshua Hayes at BigWaveTrading.com. Aloha.